Hi there. When we're studying the economic environment, in A-level business we'll come across a concept called fiscal and monetary policy. So let's just spend a couple of minutes explaining what it's all about. Don't forget, this isn't A-level economics. We don't need to know the detail of this aspect, just an awareness of what fiscal and monetary policy is. Well, fiscal policy is all about taxation and spending. It's what the government decides to do in terms of the taxes it levies on individuals and companies, as well as what it chooses to spend those taxes on, and whether or not it needs to borrow money in order to finance a budget deficit. So more on that in a minute. On the other side, monetary policy is all about the use of interest rates predominantly and other tools and tactics to control the amount of money in the economy and the cost of money, which is the interest rate. And that, as we'll see in a second, is controlled by the Bank of England. So just turning to fiscal policy, there are lots and lots of different taxes, but the three most important taxes that are levied by the government in terms of the amount that they raise are firstly income tax, which is a tax, as it says, on the employment income of employees and self-employed people. Corporation tax, which is a tax on the profits earned by businesses. And thirdly, VAT, or value-added tax, which is a tax that is levied on what we spend on goods and services. On the other side of the coin, with fiscal policy, the government spends our taxes. And the three main areas that it spends on are health, in particular funding the National Health Service, education, providing free education for certain years, all the way through to 18, and also supporting education beyond 18. And perhaps the biggest, social security, the vast majority of which is the payment of state pensions and related benefits. But other things go in there, such as unemployment benefits. Those are the three main areas. Obviously, the government also spends on areas like defence. And don't forget, it also spends on what's known as infrastructure or capital projects. The picture on the screen there is a major project currently ongoing, a little bit delayed, called Crossrail. So there we go, fiscal policy, the taxes the government levies and what it decides to spend them on. And of course there's going to be a situation where the taxes that are raised are not enough to cover what the government wants to spend. So for example, here's some data for the UK. In 2018 it's expected that the total value of taxes raised will be £776 billion. However, the government would have spent £813 billion, which means that there is a deficit. Spending is greater than taxes, in this case a budget deficit of £37 billion. And the way the government funds that or finances that is by borrowing money, government borrowing, and therefore increasing the national debt. Okay, that's fiscal policy. Just a word on monetary policy. This is all connected really with interest rates, and there's a separate video on those to watch. The key point to remember about monetary policy is that it is controlled by the Bank of England, and in particular the Monetary Policy Committee, who meet each month to decide what the base interest rate should be in the UK economy. The main aim of the Bank of England is to try to keep inflation or price rises low within a target of 2%, but of course they also look at the role of monetary policy in trying to support a sensible, stable level of economic growth. There we go then, that is just an overview, because that's all you need of fiscal and monetary policy.